So how do you know when the stock is making a fake move higher? Well, there's a number of things you could consider. There's tons of indicators out there to try to figure that out. However, over the years, over the course of me trading for about 12 years now, okay, I have found out that some are more reliable than the others, and I'm going to demonstrate just one of them to you today. If you're curious to know which other indicators I use that help me time some of my trades to a better extent, please visit marketcrash.money, click how to profit, and schedule your consultation. So this is what's going on, right? So it looks like, it appears as if the markets are going higher. So take a look. Google took a small dip in the morning, was trading at 984. Then all of a sudden, it rushes higher all the way to 1022 level. Now, what do we notice? Apparently, at this point, you know, some people are getting excited, especially the ones that bought the stock market on Monday when it was up 670 points. Because yesterday, they were in pain. They were freaking out. Oh, my God, we sure hope the market's going to turn back around. It's going to go higher. So, boy, were they happy to hear the analysts on CNBC today talking how they're buying the Google, right? But let's take a closer look. Is this what's really going on? Well, apparently, as the price section was showing that the Google is turning around and it's about to go higher, look what's accumulation and distribution indicator is showing us. Clearly, it's flat. Not only it's flat, but it's completely flat for the day. As it appears that the markets were going higher multiple times, look at the pattern that we're observing. Every time Google gets to about 1024 level, one time here, it falls lower. One time here, it falls lower. Now notice, every time it moves higher, your accumulation distribution doesn't move. And look at the volume. And it may be a bit harder to see here from the chart, right? But the biggest volume clearly, hopefully you can see this blue line right here, which indicates the highest volume of the day was on the way lower when Google was opening around the 1,000 level and was selling off to 984. This is where we observed the highest volume of the day. For the rest of the day, the volume is lighter. So by observing the lighter volume, okay, it just doesn't have enough momentum to break out of this range and go higher. Everybody was expecting for some positive news today, but it just didn't seem like anything is happening, right? So some of the news could have been interpreted as good, but what we're seeing, the stocks are not reacting positively, which tells us there is another potential reversal that's in the making. So where are the stocks going to end up based off this information? This may actually make a good short. So how would you take advantage of such a situation? Well, let's take a look at where the options are currently trading. So Google at 10.11, 10.12 roughly. Okay, your put options for tomorrow, $1,005 strike. You can buy them right now for around 10, 11 bucks. So let's say you're able to get them at 10.80, and let's say you would like to invest $3,000. So at 10.80, you'd be buying 3 Google puts for a total of 3,300. We're going to follow up on this trade and see where Google trades by the end of the day and where Google trades tomorrow. Thanks for tuning in, and I'll catch you on the next video.
If there is anything that we can learn from history, is that rising interest rates equal to lower stock prices. We're officially at the foundation of the new era going forward of an increasing interest rate environment. It was plainly stated today by Jay Powell that the era of rising interest rates is right on the horizon. And the speed of interest rate hikes is going to be determined by the upcoming economic data. So, if higher interest rates mean lower stock prices, well, why aren't the markets falling by 500 or 1,000 points today? Well, everybody expected the interest rate hike today. However, any future unplanned rate hikes could definitely take the markets down. So what is the one significant data that's going to be revealed to us soon that could create panic in the market? And the answer is the job report on April 6 is going to be closely watched. And today is March 21st, so we're not far from April the 6th. That is officially when the stock market could really tank and produce significant losses. Now, in the past, I have actually produced a video and I posted it about the potential correction of market crash right around April 6th. Now, also looking back in the history, when some of these announcements do come out and when some of the data is presented, sometimes markets do not react logically. And what we've seen in the past, there is such a thing as what I call a delay effect. And what I mean by a delay effect, although the rising interest rate environment has never been more clear, the markets are not dropping significantly, or at least not yet. The delay effect could officially postpone a significant drop in the market until April 6th, or shortly after that, I would say within 2 weeks after April 6th. So you still got time to profit from the significant drop in the stock market that it will take place relatively soon. If you'd like to know how to do that, visit marketcrash.money. Find out all the possibilities of a market stock crash in 2018. Possible Bitcoin crash. More importantly, how you can take advantage of the upcoming crash before it takes advantage of you. If you've been potentially, or your financial resources been depleted in the crash of 2008, or maybe you have suffered some significant losses in the year of 2000 during the dot-com bubble, or maybe you remember things all the way back into 1987, and you're wondering, well, how do I avoid the same mistakes? How do I preserve my capital? How do I actually benefit from the market fall to where I'm not just protecting my resources and my capital? How do I actually profit? Because the truth is, if you look in the history, all fortunes, all significant fortunes were created in the stock market when the stock market reversed. And right now, we're faced with an opportunity of a lifetime when the markets are at all-time high and they present an incredible opportunity of a trend reversal. So don't wait, take action now. And by the way, if you'd like to learn how similar exactly is the environment between 1987 crash, the pre-existing conditions, and compare it to the potential crash of 2018, visit one of the videos I just posted a couple of days ago that is titled Stock Market Crash 1987 versus Market Crash 2018. I believe you would be completely astounded by simple answers to key 11 questions and similarities between the environment in 1987 and the environment we're facing today in 2018. Again, if you're a new trader or an experienced trader looking to profit from this new market environment, because it has never been more clear that the environment is changing. We're exiting the environment, the period of the United States history where the interest rates have been artificially low for a significant amount of time, for many, many years. And now we're entering a new phase where interest rates are going to be continuously rising. So how do you profit? The same strategy has worked in the last 8, 9, 10 years is not going to be producing the same results. If you're looking for a new strategy, click right here, how to profit. Schedule your consultation and take action now. Make 2018 your most profitable year.